Welcome to the Deep Dive, where we cut through the noise to get you truly well-informed. Today, we're diving into a fascinating corner of the blockchain world. Often when we talk about this tech, our minds jumps straight to the future of all the incredible possibilities, the what-ifs. But what if I told you we're exploring a platform that isn't just dreaming about tomorrow, but is delivering real-world benefits today? We're talking about Avalanche. It's a smart contracts platform that's been making some serious waves. You've shared a really insightful stack of sources for this one, articles, research, some really fascinating news updates too. So our mission today is clear. We're going to unpack Avalanche. We need to understand its unique tech, explore how it's already being used in, surprising ways right now, check its current market pulse, and then, of course, peek at its ambitious roadmap for what's next.
And that's exactly the journey we're on. We'll explore Avalanche's core technical components, look at its, tangible use cases, and see how it stacks up against major competitors like Ethereum. We'll also dive into what the experts are saying about its future, really cutting straight to the important stuff. Consider this your shortcut, basically, to be genuinely well-informed about Avalanche.
All right, let's unpack this. For anyone who might be familiar with the blockchain, but maybe not deeply immersed in Avalanche, what exactly is it at its core?
Well, at its heart, Avalanche is a network of blockchains and a smart contracts platform designed for high performance. It uses a unique proof-of-stake consensus algorithm. Specifically, they call it the Snowman Consensus Protocol. The team's vision is pretty ambitious. Create a platform that is incredibly fast, versatile, secure, affordable, and widely accessible. And it's entirely open source. That's a key part of its whole ethos. The real ingenuity, I think, lies in its architecture. They describe it as a network of networks. Think of it maybe like a highly specialized city rather than just one giant congested highway. It's built on 3 distinct interoperable blockchains. Each one has a really specific job.
Okay, 3 chains. Specialized city. I like that analogy. What are they?
Right. So first you have the X-Chain. That's the exchange chain. This is like the city's financial district, you could say. Purpose-built for creating new digital assets, facilitating their exchange, handling cross-chain transfers quickly. Importantly, it's not typically used for general DeFi applications. Its addresses start with AVAX, just so you know.
Got it. X-Chain for assets. What's next?
Then there's the P-Chain, the platform chain. Think of this as the city's planning department and public works. It coordinates all the validators, manages the network's staking mechanism, and crucially, it's where new layer 1s, or what Avalanche calls subnets, are created. Also, if you're staking AVAX, your rewards arrive here. Its addresses start with PAVAX.
P-Chain for platform management and staking. Makes sense. And the third one.
And finally, we have the C-Chain, the contract chain. This is kind of the main downtown hub, a vibrant district that's actually an instance of the Ethereum virtual machine, the EVM. So this is where smart contracts run. And it's the chain most people interact with for all sorts of decentralized applications, or DApps, in the Avalanche ecosystem.
That analogy of a specialized city really does help clarify it. So having these 3 distinct optimized chains, what's the practical advantage for, say, a developer or even just a user, having these separate chains instead of one big one, like some other networks?
Yeah, that's an excellent question. And it's really key to Avalanche's efficiency. By separating these core functions, asset stuff, platform management, smart contracts, you avoid resource contention. Each chain can be optimized just for its specific task. It prevents that kind of congestion you'd see if, say, a huge asset transfer suddenly blocked a smart contract from running. It means faster, more predictable performance across the board, basically.
That makes a lot of sense. Avoids bottlenecks. So, with these chains humming along, what does this all mean for the native AVAX token itself? What role does it play in this city?
Right. AVAX, it's the lifeblood of the Avalanche network. Its maximum supply is hard capped at 720 million tokens. That's a fixed amount. It won't ever increase. What's really fascinating about AVAX, I think, is its utility. It's used to pay for all transaction fees on the network. And here's the kicker. Every single one of those transaction fees is burned.
Burned? You mean like permanently removed from circulation?
Yeah, it's permanently gone.
So every time someone does anything on Avalanche, the total supply of AVAX shrinks a tiny bit. That's quite a built-in deflationary pressure.
It is. It's a fundamental aspect of its token economics, designed deliberately to increase scarcity over time. Beyond just fees, AVAX is also crucial for securing the blockchain through staking, and it gives holders a voice, lets them participate in governance votes. Actually, the rate of new coin creation and even the transaction fee structure are entirely user-governed. That adds another layer of decentralization to its economic model. Just for context, as of September 19, 2024, the circulating supply was around 405.93 million AVAX.
Okay, that foundational understanding is key. But the real power play, it seems, the thing that might truly set Avalanche apart long-term, that sounds like it's subnet architecture. Our sources are definitely buzzing about these subnets, calling them a groundbreaking advancement. What exactly makes subnets so special? Why are they such a big deal?
Yeah, subnets they're really a sophisticated architectural piece, and they are Avalanche's core answer to those persistent blockchain challenges. Scalability, customization, interoperability. Instead of being just like bolt-ons, they're designed as independent networks. They aim to overcome many of the limitations you find in traditional layer 2 solutions.
Independent networks.
Yeah.
Okay. So what are the big advantages they offer, especially thinking about maybe businesses or big projects?
Well, the advantages are quite compelling, particularly for enterprises, yeah. Firstly, they offer something close to infinite scalability, or at least that's the goal. Each subnet operates with its own independent execution threads, parallel processing. This means they don't compete for resources with other subnets. So you effectively prevent that congestion we often see on more monolithic networks.
Right, no fighting for space on the main highway.
Exactly. And that translates directly into significantly reduced gas fees and enhanced transaction speeds because the network load gets spread out efficiently.
Okay, faster and cheaper is always good. What else?
Secondly, and this is a major differentiator, incredible customization. Imagine you're a big company, an enterprise. You can deploy a subnet with your own unique token economics. Tailor your own fee structures, choose between permissioned, like private or permissionless public access, and even configure specific privacy settings and validator requirements to meet very particular needs, like, say, regulatory compliance for sensitive institutional stuff.
Infinite scalability, that phrase always catches my ear in blockchain. It sounds almost too good to be true, especially when we hear about other networks struggling. Are there any, trade-offs or complexities with this network of networks approach compared to maybe a simpler layer 2 built on top of a mainnet?
That's a fair point. Infinite is, of course, a theoretical maximum based on the architecture. But the design does allow for unprecedented scalability compared to shared resource models. The complexity, it's maybe less a trade-off for the end user and more about the initial architectural design for the developers building the subnet. Unlike a typical layer 2, which usually inherits security from its parent chain, each subnet has its own set of validators.
Ah, okay. So security relies on that subnet's validators.
Correct, which means ensuring a robust validator set for each subnet is crucial for its security and decentralization. And that brings us to what's required to participate.
Right. You mentioned validators for subnets. What does it take to become one, to help secure one of these independent networks?
It's a critical security measure. To be a validator on any subnet, you first have to join what they call the primary network, and that requires staking a minimum of 2,000 AVX.
2,000 AVAX.
Yeah, so it ensures that a significant chunk of the network's value is tied to the security of the whole ecosystem. Additionally, just launching a subnet itself costs a 1 AVX fee. And it's recommended, not strictly required, but recommended, to have at least 5 validators for operational stability.
Helps keep things decentralized and running smoothly for that specific subnet.
Exactly. Integrity and decentralization.
It's clear Avalanche has a really robust technical foundation, but like we said at the start, our sources aren't just talking theory, they're showing what it's already doing. Can you give us some of the compelling real-world examples? What's Avalanche doing today?
Absolutely. That 7 Avalanche use cases article really highlights the tangible impact, and it's surprisingly diverse. It's not just finance. Take Lemonade Insurance, for example. They're providing crop insurance to small farmers in Kenya.
Crop insurance in Kenya. How does blockchain help there?
Well, they use automated policies. Oracle's external data feeds track weather conditions like rainfall. Then smart contracts automatically trigger payouts based on those conditions. No complex claims process needed. It offers a vital financial backstop, especially as some traditional insurers are actually pulling back coverage because of climate change risks. It's a really powerful social impact use case.
Wow, that's impressive. Using oracles and smart contracts for direct automated insurance. Okay, what else?
Then you've got Deloitte, the consulting giant. They're working on disaster relief. They're using Avalanche to automate, secure, and provide transparency for FEMA public assistance payments after natural disasters. That's apparently a notoriously complex, often opaque process. Blockchain makes it simpler, more trustworthy.
It's okay. Big Four accounting firm using it for government payments? That's serious.
Definitely. And at entertainment, there's Dreamus. That's the entertainment arm of the Korean giant SK Planet. They power their OK Cashbag ticketing app, serving 21 million users with Avalanche.
Ticketing, how does that work?
It creates an immutable trail for tickets. This helps mitigate scalping, secondary market abuse, counterfeiting, big problems in the, $230 million ticketing industry over there?
Verifiable, non-fakeable tickets. I can see the appeal.
For sure. Then, in structured finance, Intane launched Intane markets on an Avalanche subnet. This platform is improving transparency, liquidity, and efficiency in the multi-trillion-dollar structured finance market by tokenizing assets. This could even potentially support smaller investment ticket sizes, opening up complex assets to more people.
Tokenizing real-world assets again seems like a theme.
It really is. And one more blockticity. They're tackling fraudulent paperwork in supply chains. It's estimated to affect like $4.5 trillion in goods. They mint verifiable certifications on Avalanche, linked to QR codes on products which point to NFTs. They've already certified $275 million worth of hemp and cannabis products, and they have plans for things like sneakers, even fruit.
Wow, from crop insurance for Kenyan farmers to preventing ticket scalping for K-pop fans to verifying cannabis, that's an incredibly diverse and high-profile list. What's the common thread here? What's drawing these significant players, Deloitte, Dreamus, Lemonade, to build specifically on Avalanche?
I think the common thread, yeah, you hit it, is that these are all real-world complex problems. They benefit hugely from transparency, automation, immutable records, but without sacrificing performance. Avalanche's subnet model lets these companies build their own customized blockchain environment, complete with specific rules, privacy needs, regulatory compliance, without having to fight for space or conform to the rules of the main public chain. It's that blend of customization, performance, and security that's really attracting serious institutional adoption.
That makes sense. They get their own dedicated, tailored, fast lane.
Precisely. And this connects directly to other recent news we saw, things like DeFi grows up and Grow Finance launches. Grow Finance, for instance, launched on Avalanche, targeting over $250 million in investment. They're accelerating institutional on-chain credit, partnering with names like Centrifuge and Janus Henderson, a massive $373 billion asset manager.
$373 billion AUM.
Yeah. These examples really highlight Avalanche's growing institutional ecosystem and that strong focus on real-world assets, RWAs.
So, given all this activity, its unique architecture, how does Avalanche stack up against the big players, especially Ethereum, and what's the market feeling right now?
Yeah, the Ethereum comparison is essential. Let's look at the tech performance first. While Avalanche's sort of average real-time transactions per second, TPS is around 14.27, which is surprisingly similar to Ethereum's 14.78 right now. The picture changes dramatically when you look at peak capacity. Avalanche's max TPS, measured over 100 blocks, hits 122.7. That's nearly double Ethereum's 62.34.
Double the peak throughput already.
And critically, its max theoretical TPS is a staggering 11,191. That's 10 times higher than Ethereum's theoretical max of a 119.1.
Okay, hold on. 10 times the theoretical capacity. So what those numbers really tell us is that Avalanche isn't just fast now, it's engineered for massive future growth. It can handle potentially 10 times the transactions Ethereum could.
Precisely. That potential throughput is a significant engineering advantage, especially for broad enterprise adoption where you need to avoid those congestion issues we see elsewhere. Furthermore, Avalanche boasts a block time of just 1.72 seconds. That's about 86% shorter than Ethereum's 12 seconds. And it achieves transaction finality, meaning it's irreversible in only 2 seconds.
2 seconds for finality, compared to Ethereum's over 12 minutes.
Yeah, 12 minutes and 48 seconds for Ethereum's probabilistic finality. Avalanche's 2 seconds is 99.73% shorter.
That's a huge difference for user experience. Things feel practically instant and permanent.
They really do. Now, for decentralization, we can look at something called the Nakamoto coefficient. Simply put, it's the minimum number of validators needed to collude to compromise the network. Avalanche has a Nakamoto coefficient of 28, meaning you need at least 28 independent validators to conspire. That's 14 times higher than Ethereum's current coefficient of 2.
14 times higher. So that indicates Avalanche is significantly more decentralized in terms of validator control. Harder for a small group to mess things up.
Exactly. More resilient against single points of failure or collusion. However, it's important to note it currently has significantly fewer validators overall, around 883 compared to Ethereum's over 1 million.
Okay, so higher coefficient, but fewer validators total. A trade-off there. What about governance and fees?
Right. Governance on Avalanche is on-chain, which is often described as more direct than Ethereum's largely off-chain social consensus approach. And, as we discussed, All Avalanche transaction fees are burned, constantly increasing scarcity. Ethereum burns only a percentage, the base fee part. The one area where Ethereum still clearly leads, though, is developer activity. They have about 87% more developers currently building within their ecosystem.
Those speed and decentralization metrics for Avalanche are certainly impressive, but that Ethereum developer lead and network effect, that's massive. How significant is that gap? Is Avalanche trying to close it directly, or is their focus maybe elsewhere?
That's a crucial point. Ethereum's network effect is undeniable, built over years. And while Avalanche definitely wants to attract developers, its strategy, especially with subnets, isn't necessarily just to become a direct competitor for every single type of dApp out there. Instead, it seems to be focusing heavily on attracting those large-scale enterprises and institutions, the ones that need custom, high-performance, compliant blockchain solutions.
So maybe less about competing for the same DeFi apps and more about carving out that enterprise niche with subnets.
That seems to be a major part of the strategy, yes.
Yes.
And the growth in real-world assets on Avalanche, which we keep seeing, suggests this approach is gaining traction.
That distinction makes sense. Okay, so switching to market performance. What's the latest news? What's the sentiment around AVX right now?
Well, the market insights, as of September 14, 2025, show AVX trading around $30.08, market cap about $12.7 billion. But the recent news highlights some really significant developments. There's a $1 billion AVX buyback plan.
$1 billion buyback. Who's doing that?
It's two prominent digital asset treasury firms. One is advised by Anthony Scaramucci, interestingly, and another is backed by Dragonfly Capital. Their plan is to acquire about 8% of the circulating supply. That signals pretty substantial institutional conviction, and it creates structural demand for the token.
Wow, okay. $1 billion buyback is major institutional support. What else?
We also saw an alt season surge, that period when altcoins tend to outperform Bitcoin. AVAX jumped 11% as these altcoin season indices hit their highest level since December 2024. It definitely benefited from its EVM compatibility and, again, that subnet traction people are noticing.
Good timing with the market turning a bit.
Definitely. And what's also potentially huge, Bitwise recently filed an AVX ETF application.
An exchange-traded fund for AVX, like the Bitcoin and Ethereum ETFs.
Exactly. And this filing coincided with a 58% monthly spike in real-world asset volumes on the C-Chain. If this ETF gets approved by the SEC, which is always a big if, it would position Avalanche as a major institutional contender, making it much easier for traditional investors to get exposure.
A potential AVX ETF plus that $1 billion buyback paints a picture of really serious institutional interest building up.
What are the experts saying about future price movements for AVX, given all this?
Well, it's vital to stress, again, these are just predictions. Crypto markets are incredibly volatile. This is absolutely not investment advice.
Understood. Not advice, just what people are forecasting. Right. But some experts are quite bullish. Lark Davis, a well-known crypto analyst, he predicted AVX could reach $100 by 2025. Wallet investors even more optimistic, forecasting $240 by 2027. Changelly's analysis is a bit more measured short-term, suggesting an average around $29.71 for September 2025, but then projecting averages like $71.43 by 2027, $232.21 by 2030. And some of these long-range forecasts get pretty wild, suggesting potential ROI by 2040 averaging near $19,500, and by 2050 averaging almost $25,000 per AVX.
Okay, yeah, forecasting decades out in crypto is speculative, to say the least. But even those nearer-term $100, $200 plus predictions show strong belief, and seems less about day-to-day trading and more about a conviction in the underlying tech and its potential to capture significant market share as blockchain matures.
Absolutely. Those long-term projections reflect a belief in the fundamental value proposition.
Let's peer into the crystal ball for a moment then. What's actually on Avalanche's roadmap? What recent technical upgrades have they rolled out that shaped this trajectory?
They've been incredibly active on the tech front, driving some really significant changes recently. The Octane upgrade. That was a network-wide hard fork back on July 19, 2025. It was a game changer. It dramatically slashed C-Chain base fees by an incredible 99.6%.
99.6%.
Yeah. It took them down from 25 NAVAX to just 0.1 NAVAX, which effectively cut average fees from around 25 cents down to roughly 1 cent.
Wow. A 99.6% fee reduction on the main smart contract chain. That's a massive win for users and developers. Makes dApps way more affordable to use.
It absolutely is. That upgrade also improved flexibility for validators and, importantly, laid crucial groundwork for future enhancements like parallel transaction execution.
Yeah.
And it also improved cross-subnet communication via something called the Interchain Messaging Protocol, or ICM.
Making it easier for these different subnets to talk to each other.
Exactly. Also, in July 2025, they launched the ERC standard. This introduced encrypted ERC20 tokens.
Encrypted tokens, like privacy coins.
Kind of, but with a twist. They have selective auditability. This is crucial for enterprises. It lets them balance transparency, which blockchain is good at, with privacy, which institutions often need, especially for sensitive data and those real-world assets. It tackles a key hurdle for adoption.
Okay, that sounds genuinely useful for businesses. What's coming up next?
Looking ahead to Q4 2025, they plan continued RWA expansion. Building on that $250 million Grow Finance milestone targeting private credit, real estate, the global RWA market is projected to hit, over $10 trillion by 2030? So that's a huge strategic focus.
10 trillion. Yeah, makes sense to target that.
We also anticipate global stablecoin integration in 2025. Partnerships to launch regulated Japanese yen and Korean won stablecoins, following successes like Visa using USDC on Avalanche and other stablecoins like URC.
More regulated stablecoins, expanding beyond the US dollar focus.
Q4 2025 should also bring further subnet customization. Modular tools for enterprises to deploy custom layer 1s, basically, with things like KYC and specific privacy features built in, targeting sectors like trade finance. And finally, Octane Upgrade Phase 2 is slated for 2026. That aims for even further fee optimization and scaling using things like asynchronous execution and adaptive block sizing. The goal is to keep average fees below that 1 cent mark, even if the network gets really busy.
That roadmap. Wow. Especially the ERC standard for privacy, the big RWA push, enhanced subnet customization. It really seems like they are doubling down hard on attracting even larger institutional players. What's the sort of broader strategy behind this specific push?
That's precisely right. And if you connect this to the bigger picture, remember that $290 million Avalanche Multiverse Incentive Program.
Yeah, the big fund to encourage projects to build.
Right. It's a clear demonstration of strong institutional confidence, yes, but also a strategic investment by Avalanche itself. It signals that Avalanche is actively pushing for its subnet model to become the standard way people build scalable, secure, highly customizable blockchain networks. They seem to believe this is how enterprises will ultimately engage with blockchain by having environments tailored precisely to their needs rather than having to compromise on a shared public chain.
So the bet is that the future, especially for enterprise, is custom high-performance chains, not just general-purpose ones.
That certainly seems to be the core thesis driving the roadmap.
We've taken a truly comprehensive deep dive into Avalanche today. We've explored its innovative three-chain architecture, the groundbreaking power of its subnets, and those surprising real-world applications from crop insurance in Kenya to stopping ticket bots for millions of users. We've also traced its ambitious path towards institutional adoption.
Yeah, we've seen how it offers distinct advantages in speed, scalability, maybe even decentralization compared to competitors like Ethereum, all while navigating a pretty volatile market and continuously evolving its code base with significant, really impactful upgrades like Octane.
What stands out most to you after digging through all this? For me, it's still that compelling blend of really advanced technical innovation meeting very practical, immediate needs across such a wide range of industries.
I agree. It's bridging that gap. And this raises, I think, an important question for you, the listener, to ponder. As Avalanche continues to connect complex blockchain tech with tangible real-world benefits for big institutions and everyday users alike, could its customizable subnet model truly become the industry standard for building these scalable, secure blockchain networks? Or will ongoing regulatory hurdles and just the fierce competition from established giants like Ethereum ultimately temper its long-term potential? Something to think about.